As usual, we'll cover 3 topics occurred this week that are going to affect you and your investments going forward. The 3 topics this week are going to be as follows: the continuing US banking crisis, the moves by central banks, and finally, it'll wrap up on what's happening with AI again. Just there's some interesting stuff happening, and I think that it's worth following up on. Okay. The AI news starting first. We've seen some small developments coming through, more movements around text to video occurring at the moment, which is faster than I thought it would occur. You're going to get people online already making some interesting little kind of ads. It doesn't quite look as good as the text to image, text to picture, kind of stuff out there. There's some real distortions around faces, but this is the kind of stuff we saw last year with regards to pictures. I anticipate in a similar kind of time period, sometime early next year, you're going to have this stuff being photorealistic, this kind of stuff you'll see in like movies and so on. But speaking of movies, speaking of the entertainment industry, there's a strike action happening in the US at the moment. Interestingly enough, it's for writers and in television and so on. And one of the things that they are arguing about is the banning or restriction of AI from writing rooms effectively. You're already seeing basically what we'd call the Luddites, people basically who are against the technology because it affects their income, trying to band together and trying to prevent it from occurring. Look, this might be viable for a year or two, but once you get to a point where the AI systems are doing jokes and doing writing as good as human beings, which I suppose will be within 5 or 10 years or so. I don't know exactly what the timeline looks like. At the current progression, it might even be within 2 years. But we will be seeing more and more people let go, despite the fact that they are going for these restrictions, because what's going to happen is people are just going to make a judgment about what is and what is not worth it in terms of hiring people, and I don't think it's going to be viable to carry on with a with a large payroll when you can possibly do this with a much smaller monthly fee to OpenAI. Next on, the US Fed came out with the statement this week around the interest rates, quarter basis point hike. As usual, they've been quite aggressive with regards to just what they're doing or planning to do, or the statements around what they're planning to do. Thus far, they have been very aggressive in terms of raising interest rates, and followed up on that, quite frankly. We haven't really seen much of a backstep from the US with regards to that. But I think in terms of progress from here, despite, like I said, the reasonably aggressive hawkish statements from the US Fed, I do suspect that they are going to be halting, at least pausing for a little while, rate hikes. I think this probably will be the last one for a while, unless we get some really surprising employment or inflation numbers coming through. I think the Fed is probably thinking they've done most of what they need to do at the moment. But like I said, dependent on data, if you get jobless claims coming, non-farm payrolls coming in very high, we get an uptick in terms of the inflation number. Especially if it doesn't fall by as much as expected, but actually starts rising, that will be, I think, very negative for towards expectations of a rate cut going forward. Also regarding the decisions around inflation right now. We are seeing oil prices fluctuate. They've come back quite dramatically from the prices that we are seeing as when OPEC Plus effectively cut production a few weeks ago. I do think that regarding that, we are in a situation where global demand, the expectation of a recession is high enough that we are seeing commodity prices under great deal of pressure right now, which will of course help with the inflation as well going forward. And finally, we come to the banking crisis and what's happening there. Well, we had another bank go down since we last spoke. First Republic Bank has gone down, and what's important about this is that it's a pretty large bank here, not the biggest ever, but like the second biggest ever bank that's had this problem. And if you look at the total number of bank crashes in this last year or so, last few months, it's larger than what we saw back in 2008, 2009. That's a big thing to have seen. In addition to that, what we also are seeing is that there is a ongoing crisis occurring. First Republic went down as I speak to you. Pacific Western, their share price has fallen quite dramatically in the last couple of days. There's talks of that bank also going away. And the interesting thing about what's happening here is just what kind of moves the government is making to try to alleviate the crisis. So first of all, JP Morgan stepped in and got First Republic. This is despite the fact that JP Morgan already has more than 10% of the insured assets in the US. And the law says you can't buy another bank if you have 10%, or the resulting bank will have 10% or more of the total assets in the US. So what does that mean? That means at the moment we are dealing with a situation where JP Morgan is growing bigger than it should be growing according to what the laws are. But why did it be allowed to happen? Why is this allowed to happen? Because not all laws are equal, and some laws trump other laws. And one of the big laws that trumps the restriction on the percentage that JP Morgan can own is trying to basically do the best deal for this taxpayer as possible. And JP Morgan came quickly with a deal for stuff. And then the second thing happened was JP Morgan basically offered what the government said was the best deal available at the time. So that they basically, by offering a good deal and timelessly, what's happened is that the government was forced to then accept that deal. Okay, and what was this deal that JP Morgan gave out that was so good? Well, it was the front of the deal, without anything happening at the moment, looks like it's going to cost the government about 13 billion out of a 90 billion total, possible loss. So that's obviously a positive. But if you look at what JP Morgan got, well, I think it's a pretty sweet deal that they got. First of all, JP Morgan did a similar deal like this back in 2008, and they spent years basically fighting lawsuits about it from the government. Because what happened is the government says, buy this thing, save the economy. They buy this bank, they save the economy. And then the government come back and say, oh, the bank that you bought basically committed this crime. And since you now own the bank, you better pay that fine. The bank that you bought, broke that rule. And since you now own that bank, you got to pay that fine. And they ended up paying tens of billions of dollars in terms of fees, fines, to the government because of doing the government a favor by buying a bank. So they've come out now and they've kind of, been a bit smarter about things. For instance, they put a thing in there about not basically paying 80% of any kind of losses from the assets that they're taking on. So 80% of the losses, basically, if there's any potential losses, goes to the government. That's one thing. They basically have gotten a bit of a sweetheart kind of deal in terms of what the government has given them this time around. And like I said, it could just be the fact that, last time they were burned so badly, they had to be extra careful about what happened. But, it looks right now that they are going to be getting a really nice little prize. They're going to be getting some very, very high net worth individuals, as clients. They're going to be getting, an asset base that could go up. And if it does go down, they don't have to cover 80% of the losses, but they get all the upside. So there's a lot of positives that they're getting at the moment that I think is very interesting in terms of what's happening in the US banking system. And like I said, there's another bank at the moment that's going under. And this means that the Fed is kind of starting to lose a little bit of control about this stuff. I mean, you saw Jerome Powell come out and say in his speech this week that, basically the line in the sand being drawn, this is where it's going to end. But another bank already on the cards for, a takeover by the government or a sale or whatever. And if that goes down, which is the next one thereafter, when it comes to this bank crisis, there has to be some kind of belief that it's stopping. And if it's not going to stop, it's just going to keep on rolling on. There needs to be some kind of firm belief that, guaranteeing all deposits, something like that there to stop this particular crisis. Because even without, a bank going bankrupt, you're seeing a huge amount of inflows into the bigger banks at the moment in the US. What's happening is people are taking money from the regional banks, the smaller banks are putting it all into the bigger banks because they are seeing that the smaller banks are right now going bankrupt. They are basically losing their assets. And that's translating into higher and higher risk in terms of the viability of these banks here. So yeah, the banking crisis, number one, not over. Number two, maybe even accelerating because we have two events happening in a period of like a week or so. And also, we are seeing the big banks, the JP Morgans and so on, getting stronger and stronger, picking up the assets of these smaller banks. And even without that, basically having people just deposit money just because they're fearful about what's happening in the smaller banks at the moment. That's all translating into a much more concentrated US banking system. And quite frankly, if the Fed doesn't step in really, really soon with regards to the US, I would suspect that we don't see a small regional banking ecosystem much more into the future. The US is going to basically turn into like a big South Africa with the big four banks, huge banks that, split among like a quarter of the assets among each of themselves, averaging it out. A huge vulnerability to any one of these institutions going bankrupt. And I think that is something that nobody wants at the moment, but unfortunately that's going to be the path that we have going forward. Okay, that's me this week, a nice little short meeting. Note on AI again, we are going to be launching that fund in the next couple of weeks. Keep your eyes out for an email from us with regards to when and where. We're getting all this the stuff together in terms of literature and so on regarding the fund and what it's going to be doing. And I think, look, quite frankly, at the moment, what's happening right now in the space is just showing no signs of slowing down. We are seeing an acceleration of developments. We've seen more and more new things coming out every week, and like I said, these are just like improvements constantly. There could be step changes happening out of nowhere. There's of course there's the things that we expect to happen. For instance, like the upgrade to Chat GPT 4 or 5, but there also could be the unexpected stuff as well. And I think that is something that's making this sector so exciting. There could be a new algorithm, and we've seen that already happen with small things. Like, for instance, I mentioned the fact that we had a change that improved token size from say 8,000 up to say 1 to 2 million. We had a change which basically improved accuracy from 67% to 82% with reflection. And I think these are the kind of stuff we're going to be expecting to see going forward. And like I said earlier today, we already are seeing the first really viable text-to-video, operations happening. And so look forward for that space. And like I said, see what we had happening with pictures and photos. Within the next year or so, the improvements will be to such an extent that you probably are not going to be able to imagine anything better than what we are seeing. Okay, thanks for having me again, and cheers, guys, and I'll speak to you again next week.